After tasting the all-time high of $68,000 for the first time in November, it has been a downward slope since. Last Saturday, it dropped again and hovered around the $35,000 mark, but roughly 50% from its all-time high. The daily price volatility for Bitcoin over the past 3 years is 75%. In comparison, the S&P 500 daily volatility over the past 3 years has been 22%. So Bitcoin has been roughly 4 times as volatile as the stock market. But these numbers likely underestimate the actual volatility of Bitcoin, considering crypto trades 24 hours a day, 7 days a week. It's much harder to sleep well at night as an investor when markets are always open and potentially crashing. Recent slumping prices followed continued reports of surging inflation, a disappointing December jobs report, and the release of minutes from the Federal Reserve's board's December meeting, which signaled a winding down of measures that propped up what it described as a steadily improving economy. Many investors see Bitcoin's price swings as part of the game, but volatility is tough for individual investors to deal with. Recent price fluctuation has followed new uncertainty over the world's lingering fight with COVID-19. New regulatory actions by the U.S. government, as well as the new legislation pertaining to crypto in the infrastructure bill. In an industry as new and unproven as cryptocurrency, it doesn't take much to drive big swings in price. More generally, new short-term investors who are selling their holdings in reaction to the latest drop may be contributing to the drop in Bitcoin's value. Some of this year's drops have been caused by a combination of factors, from excitement about low-quality coins to negative remarks from Elon Musk to China's most recent crackdown on crypto services. This mix of factors has potential to make sell-offs all the more violent. Overall, the crypto market has lost over $1 trillion in worth, out of which it's responsible for $600 billion. With the Fed's intentions rocking both cryptocurrencies and stocks, a dominant theme has emerged in the digital asset space. Cryptos have twisted and turned in nearly exactly the same way as equities have. Crypto is reacting to the same kind of dynamics that are weighing on risk assets globally. Unfortunately for some of the mature projects like BTC, there is so much cross-correlation within the crypto asset class, it's almost a certainty that it falls. At least temporarily in a broader altcoin valuation contraction. Crypto-centric stocks also dropped last Friday, with Coinbase Global Inc. at one point losing nearly 16% and falling to its lowest level since its public debut in the spring of 2021, Bloomberg data shows. MicroStrategy Inc. tumbled 18% while the Securities and Exchange Commission said the company can't strip out Bitcoin's wild swings from the unofficial accounting measures it touts to investors. The enterprise software company's pile of Bitcoin has effectively made its shares a proxy for the digital asset. Meanwhile, the Biden administration is preparing to release an initial government-wide strategy for digital assets as soon as next month, and task federal agencies with assessing the risks and opportunities they pose, according to people familiar with the matter. Meanwhile, more than 239,000 traders had their positions closed over the past 24 hours, with liquidations totaling roughly $874 million. According to data from CoinGlass, a cryptocurrency futures trading and information platform. Though liquidations have spiked, the numbers are relatively muted when compared to previous declines. The decade could prove of significant importance to Bitcoin's evolution. Revolutions within the financial ecosystem aside, there are a couple of areas in Bitcoin's ecosystem to which investors should pay close attention. As regulation evolves to keep pace, it is likely that the ecosystem will expand. The mainstreaming of Bitcoin as a payment mechanism, or for that matter, its increasing attractiveness as an asset class, will not occur without technical improvements in its ecosystem. To be considered a viable investment asset or form of payment, Bitcoin's blockchain should be able to handle millions of transactions in a short span of time. Several technologies, such as Lightning Network, promise scale in its operations. New cryptocurrencies that have formed as a result of hard forks of the Bitcoin blockchain, including Bitcoin Cash and Bitcoin Gold, aim to adjust the parameters of the ecosystem in order to handle more transactions at a faster pace. But we will see what happens next. Bitcoin will revive its position, but this time it will be with the regulations. What are your thoughts on Bitcoin's situation? Let us know in the comments below. With that, we have come to an end, so make sure you subscribe to the channel with notifications on, and I will see you in the next one.